Bitcoin almost made it through to the end of the week without crashing, despite the US markets heading down significantly. Now, it made it almost there 8 hours from the close. We saw it down 6.6%. And so last week, we also saw the popularization of a Black Monday. What does that mean, and what does it look like in terms of the market? Could we see this coming when the US market opens tonight? Let's cover that in today's video. Hit the like, subscribe to the channel. Heaps to get through today. So let's start out first with Black Monday. Now the search volume anyway, has spiked on Google in the last couple of days. Obviously, it's been popularized over on X, and the man himself here has been talking about Black Monday like his life depends on it. Here is Jim Cramer. Now, you might know of Jim Cramer, especially if you're in the US, but if you're on X a lot, you might even know that this is typically an inverse signal. Well, a lot of the time, whatever Jim says is basically an inverse signal. You want to do the opposite to him. But I'm not saying that that is what we have to do here. This is just what has been shown to happen in the past. Essentially, it's nothing against Jim. It's just like a collective thought of retail. Now, the other thing we saw with retail, going back to this low in March, just a couple of weeks ago, and even just a few days ago before we had this huge drop down, is that we saw some of the largest retail buying in US stocks in history, nearly $5 billion on that day. Unfortunately, generally retail is incorrect. Now, we've also been looking at the possibility of lows forming, whether it was through here or lower. Now, there's a lot, as I said, to get through. So let's take it one step at a time. I've said a few things here. We want to get through Black Monday. What does that mean? What does that look like in the market? Looking at bottoms and what to do there. And then could this all be an overreaction in the markets with Trump's tariffs? So taking a step back, Black Monday has jumped right up. Now, if you look at the history of Black Monday being searched, there is a massive pattern here, but the pattern is November's. Every single November, Black Monday spikes, and that could be due to history. We've seen Black Mondays happen before on the markets. Where have they occurred? Well, on the Dow Jones, we've seen multiple, well, a couple of them anyway. There have been a few Black Mondays here. We've got one in March, basically when the market has absolutely crapped the bed. So what is Black Monday? Where did the term come from? A quick Google search shows you Black Monday was a global, severe, and largely unexpected stock market crash on Monday, October 19th, 1987. Worldwide losses were estimated at 1.71 trillion. And remember, the markets were much lower than what they are now. So 1.7 trillion is a huge number in comparison to what it was back then. But we've also seen similar days going back to 2020. Obviously, there was the COVID dump, huge rebounds from that point. We had Trump coming in 2016, and then the trade wars began in 2018. This was with China here. So 2018 ended up being a pretty well sideways year. Here's January 2018, and this is December 2018. Two big corrections there. You had 12% and then 19.4% from the October top down to the December low. Of course, it recovered, put in the top before COVID, massive dump, and then the rest is history. The money printers turned on. But some would argue that this time is different because, well, at least in the case of Trump, they're not trying to turn the money printers on. They're trying to turn on the tax printers, bringing in more taxes from US companies with the tariffs that they're placing on, obviously, overseas imports and exports, and basically trying to get a war going on here, a major economic war across the board. And they want the other countries to come to the party, drop the tariffs, and maybe, and because we don't know what Trump will ever do when his next words are out of his mouth, maybe he will look to drop those tariffs as well if they have their reciprocal drops together. So that's a look at Black Mondays. You've had the 1987 dump, huge day down here, and then the market recovered to put in a top in 1990 before the recession happened. We had the 1990 recession. Now, for those who are following the 18-year cycle, you'd note that this 87 crash happened before the end of the peak. That was a huge dump, 41%. Then the market took a long time to recover. You can see the breakout happened 15 months later. So there was a bounce, 6 months, consolidation, another 6 months, another couple of months here, and then the breakout. Then it took another 7, 8, 9 months to get to a new, fresh, all-time high after the dump. And then several months after that, you had the 1990 peak, the recession happened, and that was basically the bottom again of the 18-year cycle. So it's not unprecedented to see these huge corrections in an 18-year cycle at the end of the 14 years before you get to the peak and then the dump. So that's happened once before. We've seen 2000 into 2002, very significant dump, but that happened over a couple of years, so not necessarily a Black Monday there. And then in the mid-cycle as well, we also saw this huge dump here, 38%. So obviously very close to the 40%, massive dump, and the market's recovered from there. So we are getting to the final phases of this 18-year cycle. Therefore, the volatility is absolutely ginormous at this stage, and it's exactly what we're seeing here as well. So Black Monday, could it happen? Well, we're getting early hours market opening. Here are the futures markets. We put it onto the daily here. And on the daily, huge gap down and a big sell-off into the first couple of hours of the trading session here. That is the first hour of the trading session. My time, obviously, here in the east coast of Australia, 8 a.m. here, and that is Sunday night in the US. Dump down, and then this recovery here of 1, 2, 3 hours so far. Do note that the hourly here has dumped onto the 50% level. So this is the major 50% level here that we're watching from the 2022 low to the current all-time highs. For me, this is basically one of the last breaking points. I'm watching this level here. If this doesn't hold and the market breaks underneath it, then I would consider this move to the upside relatively weak until proven otherwise. And what does that mean? It's got to get back above the swing lows. It'd have to get back above the trend lines as well. And you can see a couple of these overbalance in time and price is forming as well, which leads me to the two signals there. The overbalance in time and price for a confirmation of change in trend and the 3-bar rule, both of which were being used on the S&P 500, which is now overbalanced in time and in price from the August correction here. And now we look to measure the next range down. Now, this is a major signal that we use for our trading and investing plans with the Investor Accelerator members. If you guys want to learn more about this to put into your own plans, check it out in the courses here with TIA Premium. And this is covered under the masterclasses. So that has just been uploaded with an update there for all of our members. And if you do want to subscribe, as I said, link is in the video description for members. Really, really useful tool there for the long-term portfolios. So in terms of the S&P 500, it has also on the open dumped right down almost to the point of the 50% level. Here it is, 48.40, 48.50, and currently as I film this video, 48.32 with the close coming up just a touch here. Still too early because it's only been a few hours. We've got another 24 hours to go for the S&P 500, but it is on one of those last legs here on the 50% level and the previous old all-time high. So I'll be watching this very, very closely over this week to see whether this breaks down or if we get this hold above the level and consolidate for any sort of move to the upside. Now, if there are other moves to the upside, 50% levels and swing bottoms are where we're looking for. Anything that was previous support, we'll look to see if it acts as resistance, 54 and around 55 points as well. So that brings me to the next rule that we're watching for these highs, which we could also watch for any sort of change in trend from a low. Just like with the highs, if there are signals to suggest that there is weakness forming, like we saw here with the 3 bars down from the exact all-time high, and we saw it at the previous all-time high, basically slowing the market down. There was really no extra movement in the market from one of the first signal here back in October. You can see there was barely a 5% range from that signal. That is a really key area to say things are likely changing. Now, if there is a low forming as well, we want to see that trend confirmation. We want to see that the trend has confirmed to the upside rather than trying to buy the dip. Like I said in the intro, last week, unfortunately, there was a lot of retail interest buying the dip before we got this absolute slam down. So roughly around that Monday, Tuesday period, they're all buying the dip. And now the market is down about 15%, currently trading about 13% down roughly from that period. So maybe enough to wipe out the retail investors that were buying that dip. That'll lead me to another point that I'm going to look at with Bitcoin when we watch the fear and greed index as well. But for now, we're on the 50%. and there's really no sign yet of a change in trend. And that's the next thing we look out for. Now, for the NASDAQ, it has also done pretty similar things here. Off the top, held up, and then slammed back down again onto the 50% level of the range. Bear market low to all-time high, sat at the moment right on that level. So one very, very important turning point here, or a very important point in the market. If this doesn't turn, things could head south rather quickly. But in terms of the macro bull market, we still don't have that breakdown or confirmation under that level on a macro closing basis. So I know everyone wants this signal straight away. We had some earlier indications with the 3-bar rule. I talked to you about that on the channel already. And then we had the drop down, breakdowns of the 50%. And in terms of any buy the dip opportunities, should have been met with stop losses. Now, before I get to Bitcoin, let's cover off the commodities. And gold has been down 3 days now. As I showed you with the S&P 500, we had the 3 bars down at that peak. And those times have shown us pretty good reward to risk on the way down. We also saw 3 bars down on the weekly chart here from the top. 1, 2, 3. Led to a weak rally into the 50% level and rejected at that. And that's important to note as well when we look at Bitcoin and what's happened over the last couple of days. We just could not cover or close above the 50% level. And so while this continues on, we got huge volatility, especially with the VIX closing at 45. Volatility, as we all should know, is a pretty good trader's market. And in terms of gold at the moment, 3 bars so far. This is not to say to go short right on today, of course, but there is weakness forming here. And again, like we'd looked at in the last couple of weeks, often gold can run up and then have these huge corrections when the S&P also corrects. So people are looking for, I guess, safe havens. And we take a look at 2006 and 2008. Here's this period through here. 2006, basically sideways for about 16 months. And then as it ran up into 2008 or March 08, again, huge correction into October 08. Big percentages there, top to bottom. You got a 33% range in that period. Then it bounced, consolidated, and broke out again. And so I bring this up because of where we sit. Hopefully what you guys have seen before now with these rules and signals, and that we've got increased volatility in the markets, which makes it a great trader's opportunity. Bybit also has gold that you can trade over there. Pax Gold, if you're looking to trade those, there's plenty of signals, plenty of volatility going on at the moment, more likely a trader's opportunity in this type of market environment. And if you're interested in the $1,000 airdrop, use a link in the video description, get on board with the traders with TIA Premium, and start your journey towards more profits in your trading accounts. So the guys over there have been doing very, very well. Big shout out to them. Shorting XRP, shorting BNB, Rune, so on and so forth. You guys can go and see all of this for free using the link in the video description. Trading results. Go back and read whatever you want with all of the traders there to make yourself more familiar and comfortable with the process. On to the stocks and a quick look at some of the crypto related stocks here. MicroStrategy on the weekly chart has had an increased weekly volume, but still under a major 50% level. So it's a very big repetition of the rules, 50% levels, support and resistance levels, 3-bar rules, and then watch those swings as well. So here we are, MicroStrategy. The top here, 323 is really another key area, and it just keeps putting in lower highs at this point. Slightly higher high on the shorter term, but overall the trend basically being down over this period. Same sort of thing for Tesla at the moment. So it's people think it's hate. We're just looking at the charts here. Big pump up, big rejection. So in terms of trading, that's the ideal place here for traders, not necessarily buy and holders. Looking at these dips, they buy and hold, and basically all the way back down to where they got in at. Now, if Tesla continues to break down here past that 210, that's probably going to be some pretty dire stuff here. But it's got a while to go until it gets to its overbalance in time and price. So unless Trump's going to change things around over the next week or two, this could be a little bit dire for these stocks, which are in a weaker position underneath their 50% levels. Speaking of 50%, we'll get to Bitcoin in just a moment. Looking at the fear and greed index here. So we're at 23, back to extreme fear, lower highs, lower lows, and the fear has crept well and truly back into the markets. However, this is still on track, crazily enough, for the 5-month period. What is this? So I've talked at length about the market sentiment and looking at how long this sort of process takes with traders. And I guess you could look at it in terms of investors as well, basically market participants. In the case of Bitcoin and the crypto fear and greed index, the last top here in March 2024 into the low of August 2024 was roughly around 5 months. There it is, 5 months top to bottom, with from the extreme greed down to the extreme fear. So this churning and market resetting took that period. Now, this is not my standalone trading system, but I do like to use it as a market sentiment tester, and I found very significant value in it. You may do what you want with it. You might not use it at all and you prefer your RSIs or whatever it is, right? But over the course of the history with the crypto fear and greed index, this tool right here, as you may recall, at some of these peaks, people discounted it and disregarded the fear and greed index, only to find now they've gone silent. They're not there anymore. They're not talking about this being wrong, because you can see that the sentiment has clearly come all the way back down into that extreme fear, as Bitcoin has also come back down to these next price levels. So let's start with the 50% and the diagonal downtrends before we get to any sort of pivot points here on the market. So over this period, Bitcoin has been rejected now twice off the 50% level. Here it is, top to bottom, this bottom here as well. Up, rejected, down, rejected again just in the last week. And here we find ourselves now in the last several hours closing out at around $78,000. Now, in terms of the shorter term, there was even that earlier signal there that I talked about in last week's video, low to high, and Friday, right up here, testing, and then now finding ourselves break underneath those lows. So it got rejected on the shorter term time frame, so we can get rid of that now. Now, the next level for BTC is the diagonal downtrend. This is the connections. It has 3 touches, which is how we should be using these tools, not just any old made up lines. And from Wednesday the 2nd, tested it and got rejected again. So at the moment, unless Bitcoin can do something in the next couple of days, maybe Trump comes out and all the countries start to fold and they drop all of their tariffs, and Trump is the huge winner in all of this and America is the big winner. It doesn't seem likely to me that Bitcoin is just somehow going to turn around from here and be the only thing that goes up. If that's the case, and of course we've had the 50% rejections, we had the 3 days down from December 2024, the diagonal downtrends rejected and also rejected underneath these previous support levels. So you can see back from the 13th of January at $89,000. It seems more likely with the downtrend that Bitcoin would likely revisit underneath the $76,000 low at this stage, bringing it back to those previous tops of the previous consolidation and around where Trump got elected on the 6th of November. He got inaugurated at the all-time high. Can you imagine that? A crypto Bitcoin president on inauguration day putting in the all-time high. Absolutely wild. So from that point, Bitcoin can still be down here at 78, 79K, down to these levels of 71. That's still about a 10% move. And, coming it back all the way to the bottom of that day could be somewhere around 12 or 13%. And down to the 50% level, that's about 20% away from this level. Now, the 50% levels are the big one to be watching here. They essentially flip it from strong to weak, depending on the time frame that you're watching. And in this case, we're watching the entire bull market. So breaking underneath 62.5K, closing under it is going to be extremely weak for the market. We've seen it happen before, but not close underneath it on a monthly basis. That was in the 2021 bull market. So this has to be measured from the low to the top. And this region from May, June, and July broke underneath it on the daily. But once the end of July came, very, very strong bounce. June didn't close underneath it either, came up to it at the end of the month, and May also closed above it. So on those 3 months occasions, which were all touching it and on a daily basis trading underneath the 50%, it managed to close above it by the end of the month. So that now sets us up for April, which on a monthly basis here, we have about 3 weeks to go. Should this come down 20% onto that level, it still has to close above that and ideally above these previous tops here of $74,000. And that's a long way to go from the current point which brings me to my other point about trading these levels. Now, we saw it on the stock markets where last week there was a lot of retail buying this dip, buying the dip on the stock market, $4.7 billion worth. The thing that tends to happen with retails, I'm not pointing any fingers here, but what tends to happen is there are no stop losses. So if you want to buy the dip, which is basically catching a falling knife, got to have stop losses because the dip can turn into another dip, can turn into another dip, can turn into complacency, waiting, and then it can turn into another dip. So if there are no stop losses in the case, well, you're pretty much going to be out of money by the time the dip comes and then the change in trend occurs. So the other option is to buy the change in trend. So you're seeing this change in trend with the swing chart here, and you start to see some strength begin to form. That means you're not going to buy the bottom tick. Likely you're not going to sell the top tick either, but you're just waiting and paying the premium for the market to show you that there is some strength coming back, that the buyers are actually interested in this asset again, and that they're going to hold it, push these prices higher. At the moment, well, there hasn't been any signs that the buyers are really stepping in stronger than the sellers. Therefore, we keep getting rejected at 50% levels and at the diagonal downtrends. So it's up to you. People love to buy the dip, but tend to do it without a stop loss. Buy the dip, there's nothing wrong with it, provided you have a plan for what goes, or what should you do if things go wrong. The other option, wait for a change in trend. I love to use the swing indicator here, and especially on a longer term basis. Like we could see with the swing chart, it's basically been down this entire time. And each time that any case, I've looked to buy anything, if I've bought it, it's broken back down, well, I've got to get out of it again, take the loss. Speaking of which, taking the loss, here is one that we've looked at recently, is ETH. And the weekly swing chart continues to be down. It just keeps putting in lower highs after lower highs after lower highs. And that's led us to the next price target, which is around 1500. We just hit that in the last few hours, 1537, and now currently trading around 1600. I can't see this stopping here. Really, no volumes come back in for ETH. It's broken underneath the support levels, and generally when a market breaks underneath it, comes back and tests the previous support, acts as resistance, you're likely going to see it fall further, which is exactly what's happened here. And I suspect we're going to come and test roughly around the $1,100-$1,200 region, which is the monthly, I'm shaking it here, the monthly double top. This top projected to the low, projected to the top, and that gives you your price projections in terms of profit targets should you be on that trade. As I said, congratulations to these guys who are using their strategies that they're creating themselves with the content with TIA Premium. Links in the video description if you want to be part of the trading community there. That's what we're looking at here with ETH and the move continuing to the downside. Of course, if there's any change in trend here and you start to break the swings to the upside, you've got to move with it. You can't stay dormant and stagnant in a move that has changed. But for now, trends are still down. As I've been pointing out with Solana as well, also still down here. And we had the 3-bar rule on the daily and the weekly from November and again in January. So I sold out of all my position here, and I mentioned that to members. Same deal when it comes to Bitcoin and ETH. I'm talking about my positions with members in Premium, and in this case, Sol has just absolutely been crushed, and it got rejected underneath the major 50% here, and has continued its way down. So I'm still looking at a target of around $80, and then would have to assess how much further it can go from that point, looking at the strength and weakness, some of the previous support and resistance levels. For now, 106, I think somewhere around that $80-$90 region is on the cards in the short term. As for XRP, it continued to break down yesterday, putting in its lowest weekly close since November 2024. Although it's still above the 50%, the swing tops are showing a downtrend. The GAN Swing Pro also still showing a downtrend on the 1 week chart, on the also on the daily. Let's chuck it back on the daily chart here. Yep, swing lows, all lower swing highs and lower swing lows, with a new daily lowest close going all the way back to November. So you got around $1.80 here. That $1.80 breaks down, then I think we head towards the targets that we've been watching, somewhere around $1.40, which would take it 60% from the high. But should things turn around, well, then we've got a good basis of which ones might be a little stronger. XRP, we've got to look at what happens to XRP if the market turns around, and then also SUI as well, which has continued to break down. after we looked at the very early top signal here back in January. You guys might recall that on the channel as well, looking at the top signals as it broke back underneath those highs and then continued to put in lower highs after lower highs. Now, last week ended very, very badly. Monday has opened relatively badly. However, at least in these first couple of hours, we're seeing a slight bounce here. So what we're watching out for, and we'll cover over the next several days here on the channel for this week, is, was this all an overreaction on the market's behalf? And are we about to see some of the major support levels step in, or the continued breakdowns from this point? Really, really important week on the markets. Don't go anywhere. Hit the like, subscribe button, and I'll see you guys back here at the next video. Take care.